In my forecast for this year, I thought we'd go to 2,300 and probably settle more like 2250 by the end of the year. I could be dead wrong. Whole things should move a lot faster. There's a lot of moving parts to all this. And maybe we'll still get to 2,500 this year. My forecast for silver this year was that it wasn't going to break out. And it hasn't yet. Again, it's in the same type of box that gold used to be. The day will come when it breaks out. I mean, gold's not going to 2,500 and you're going to have a gold silver ratio of 100 to 1. And silver is going to stay at 25. Even if gold gets to 2,500, I don't know, later this year, next year at some point, you had an 80 for a gold silver ratio. Well, that's 31. Okay. So that gets you out and broken. And the same thing will eventually happen in silver that we just went through with gold.
With his wealth of experience and expertise, Craig Hemke is known for providing valuable insights and analysis through his platform at tfmetalsreport.com. Craig, remaining open to various possibilities, maintains that gold could potentially reach $2,500 by the end of the year. He also anticipates that a gold-to-silver ratio of 80 could serve as a precursor to a breakout in silver, mirroring the pattern observed in gold. According to gold trading platforms, gold prices are on track to achieve a weekly gain of 1%, adding to their 7% increase since the beginning of 2024. Similarly, silver prices, the sibling commodity to gold, are attempting to reclaim the $25 per ounce threshold. However, silver prices are still poised for a weekly loss of about 4%, reducing their increase since the start of 2024 to less than 3%. Embarking on an analysis of gold's trajectory, Craig envisions a forthcoming breakout despite past projections falling short. His foresight suggests that gold's ascent depends significantly on macroeconomic factors and the Federal Reserve's future policy decisions. Gold prices are posting double-digit gains in early U.S. trading Thursday and are closing in on the recent record highs. Despite silver's current situation, Craig maintains his belief in an imminent significant move. However, to match gold's recent climb, Craig asserts silver must exceed $28, urging investors to stay alert. According to metal markets analysts, silver prices could be headed for an explosive rise in 2024 if global supplies continue to fall short of demand, and the Federal Reserve makes good on its plans to pivot to interest rate cuts in the coming months. Investing Haven projected silver to trade at $28 in 2024, with expectations of testing the $32 to $36 range once it breaks this level. The website anticipated an average silver price of $34.7 for 2024. Now, we present the clips of Craig Hemke's insights from his recent interview with Commodity Culture. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Last year, I thought we'd get to 2,300. Obviously, we didn't. But I repeated that this year. I said, okay, I still think that breakout's coming. And then you get this follow-on rally after that. And that's what's happened. Now, once gold, if you go back to the 1st of March, because Jesse, I still see a lot of people say, well, I don't know why gold suddenly took off. It was a little bit of what I just described. Back at the last day of February was the latest PCE report in the U.S. on inflation. And gold ticked up about $12 that day. And it was up another $10 on Friday, the 1st of March, when one of the Fed goons, Goon Waller, came out and gave a speech detailing where he thinks monetary policy should go from here. And he said a couple of things. He said, well, I think we should do kind of a quantitative tightening, Operation Twist thing where we liquidate some of the long end and buy the short end. Well, that would have the impact of uninverting the yield curve. And usually a recession follows that when the yield curve uninverts. So it's like, okay, that might cause a recession. But then he also said something very important. He said, if we do that, that'll give us room the next time we need to do an asset purchase program to buy on the long end. And that's when everybody went, wait a second, hold on. He just said there will be more QE eventually. Gold shot $30 higher that day, Friday the 1st, from that point. Closed at daily all-time high and a weekly all-time high. About 2090, something like that, 2095. And then here came that rush of money that I mentioned. You make that new all-time high. And so the very next week, that first week of March, from the 3rd to the 8th, gold was up like $97. Open interest in COMEX gold expanded by 25% as all this rush of new spec money came in. We went to 2,200. So what's that? 5% rally, not the 8 or 10 yet. And now we're kind of trying to find our way forward. So that's what happened. How much we have legs to 2,300 and then beyond as we move into the summertime will kind of depend on the macro conditions and what the Fed does. My forecast for silver this year was that it wasn't going to break out, and it hasn't yet. Again, it's in the same type of box that gold used to be. The day will come when it breaks out. I mean, gold's not going to 2,500 and you're going to have a gold silver ratio of 100 to 1, and silver is going to stay at 25. Even if, if gold gets to 2,500, I don't know, later this year, next year at some point, you had an 80 for a gold silver ratio. Well, that's 31. Okay. So that gets you out and broken. And the same thing will eventually happen in silver that we just went through with gold. I mean, it's in this box between roughly 22 and 28. It's got to break out above 28 to get the same kind of hot money reaction that gold just got. For now, it's just been short covering. I mean, as of 3 weeks ago, the hedge funds in silver were net short. And so all this happened is they've had those short squeeze, they've added some longs, and you've had this run that got to about 25.50, but silver can't get above 28 until it gets above 26. Over the last 15 months, silver's run up to 26 3 or 4 times. And the hedge funds have gotten kind of about 20,000 long, and the banks have gotten about 20,000 short, and then the bottom drops out again. With the only parties making money are the banks that shorted all the way up. If you want silver to go, and by extension, the mining shares, because I'd encourage anybody to pull up a long-term chart where you can plot silver and like the GDX together and see how closely correlated they are. If you want silver to go in the extension of the mining shares, you got to get silver to break out. And it's got to get above 28 and then a 3 handle, and then it'll probably go to 35. But it's got to get to 26 first, and it's not even there. So I'm unfortunately, we're going to continue to be frustrated by it a little bit. But fortunately, and I say this as someone who is still holding silver that I bought like in 2010, we probably have to wait a little bit longer for it to get the kind of explosive move we just saw in gold.
Craig Hemke underscores speculation of an alternative trade currency driven by BRICS nations aiming to lessen dependence on the US dollar. However, such a transition will take time, requiring confidence building in the new currency. Russia, a prominent member of BRICS, has advocated for de-dollarization initiatives, especially in Africa. President Vladimir Putin has urged African nations to consider trading in local currencies, including the Russian ruble, to diversify away from the US dollar. This aligns with BRICS' broader agenda of encouraging developing nations worldwide to diminish their dependence on the US dollar in trade transactions. Throughout the year, the BRICS bloc has unveiled plans for digital currency initiatives. Notably, the alliance has announced the development of a blockchain-based BRICS payment system, which has sparked speculation regarding the potential introduction of a native currency within the bloc. Furthermore, Craig emphasizes that introducing a new trade settlement currency could have significant repercussions, particularly on the value of the US dollar. A shift in demand away from the dollar, coupled with an increase in its supply, could lead to a decline in its value, akin to any other commodity facing reduced demand and increased supply. Let's get back to the interview.
A lot of smart people that think that. And again, it would make sense, right? If you want to offer an alternative trade settlement currency, on that side of the world primarily, away from the dollar and, the hegemonic stuff that the US does with it. Well, you got to give it some kind of confidence. You just can't use the yuan. You can't just use the ruble and have people feel real, okay. And so just like how the dollar became the reserve currency after World War II, because the U.S. had all the gold and a functioning economy, so it's backed by gold. Okay, hey, we'll use the dollar. Okay, I feel good about it. The BRICS would probably do something like that. What I think people need to be cautious of, and I've said this for a long time, is this is not like a binary flipping of a switch, where they announce they're going to start using something or make it available. That doesn't mean immediately the dollar's dead, It's not that simple. Think of it, though, in these simple terms as just a reduction of demand for the dollar. The dollar, no different from any other good. Oranges, homes, whatever. You've got the supply curve and the demand curve. They teach you that in Econ 101. And where they intersect, that's price. And as you move the curves, you move the price. Okay, so in a world where we're constantly increasing the supply of dollars, could also be a world where the world's demand for dollars is falling. If you've got more apples and less demand for apples, the price of apples is going to go down. And so think of that's how this impacts the dollar. And then, how does that impact spending power, inflation, commodities, everything else? So that's the first thing on that. The other thing, though, gets back to this bigger picture. Again, the hegemon. The biggest thing that happened, at least for now, in the Ukraine war was the first weekend of March in 2022 when the U.S. froze Russia's foreign currency reserves that weren't held within Russia, about $300 to $400 billion worth. But then also kicked Russia out of SWIFT. I mean, how does that not get noticed by anybody that, you may not look at yourself as an adversarial country to the U.S., but you might see a point in the future where the U.S. is going to frown upon you looking out for your own best interests. So now there's interest in, well, maybe we ought to set up our own deal over here. Going on right now as we record this are steps being taken to steal, really, those foreign currency reserves of Russia. They were frozen. With funding for the war in Ukraine, we've seen trial balloons floated, first by unnamed sources in the EU and in the U.S. government, but now, as Yellen has said this. Even Biden said this a couple weeks ago. He'd like to get some plan to access those funds, before the next G7 meeting. So what just came out, we're recording this on the 13th, I saw headlines today. They're going to take the interest that Russia is earning in those parked frozen funds and give the interest to Ukraine. They're not just going to steal them yet. They're just going to give the interest and earning, whatever that is, and give it to Ukraine because Ukraine's run out of money and the political will in the U.S. to keep, just giving them these blank checks. That's not good for continuation of the current system. Again, get sideways with the U.S. We're going to take your money. We're going to freeze you out of our system. Okay, I think I'll use this other system now. So keep an eye on this. There's also a big threat to expand the war. The actual kinetic living, fighting, and dying part. So this is all, and again, those are all things that we can sit here in middle of March and go, well, gold's broken out. Now we got to watch the Fed, all this kind of stuff. There's all stuff that might just go completely haywire by summertime and, send gold and silver soaring. So these are all things we got to be aware of and keep our eyes on.
According to a report from CNBC Sunday, analysts forecast that the price of gold and silver will rise if the Federal Reserve cuts interest rates this year. As we anticipate potential shifts in precious metal prices, what factors do you believe will significantly impact the future trajectory of silver and gold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.